Afternoon, everyone, and thank you for joining us for our PPP Round 2. We are so fortunate again to have such a great panel joining us. Just to give you some guidelines for this meeting, as you can see at the bottom of your screen, there's a chat function and a question and answer function. Both of our panelists or all three of our panelists will present the presentations, and then Jeff and I will be constantly monitoring those questions to be answered after. I do see there's a lot of you calling in on the phone today, so if you have a question, you can send an email to myself, Johanna at middlesexchamber.com. That's Johanna at middlesexchamber.com. Thank you again for joining us for this very important workshop, and I'll turn it over to our coach, Larry McHugh.
Thank you very much, Johanna, and thank you very much. We had 127 pre-registered for this event today, so we're very excited about that with the numbers that we're constantly getting for our workshops. This is the first of 3 workshops this week. Tomorrow morning, we have one on sexual harassment prevention training. This takes care of your state requirement, and that will start at 8:30 tomorrow morning. That's done by Jackson and Lewis. And then on Wednesday, we have Rising to the Challenges of COVID-19, a panel discussion with 3 of our major health department executives from throughout the region. This will also be a very important one as we move forward. It gives me a great honor to introduce our panelists today, Drew Andrews and Brian Kerrigan from Willisey, and Greg Shook, president of Essex Savings Bank. We could not be doing these workshops if we did not have organizations like Willisey and Essex Savings Bank constantly step up to the plate to help us move forward with making our chamber one of the strongest in the New England region. So again, Drew, Brian, and Greg, a huge thanks, not only for doing this today, but more importantly, your wonderful, wonderful support for a long period of time. And I would be remiss if I didn't mention Marge from the Willisey office for all the work that she's done with Johanna putting this together. So I'll turn this over to, I guess, Drew now.
Thank you, Larry. I appreciate that wonderful introduction, and thank you for your leadership. As always, another year, we're starting another year, a new year, and you're still at the helm, which is great. It's going to make the chamber and Middlesex County better. We have a presentation, Brian and I, and then we'd like to go over giving more of an overview of PPP2 and some of the changes that happened to PPP1, and then we'll entertain questions also. And then I know my friend Greg has a few thoughts from a banker's perspective. So I'm going to push it over to my partner, Brian, and let him run with our presentation.
Thank you, Drew. Thanks for the introduction. So today we're going to talk about the Consolidated Appropriations Act of 2021. This will mainly focus on the Paycheck Protection Program. It's Drew and myself presenting today. I'll give you a brief overview of the agenda today. So first thing we're going to cover is the PPP1 clarification. Then we'll talk about the PPP second draw for employers with fewer than 300 employees. And we'll wrap it up with a brief discussion about the employee retention tax credit. So let's start with the Consolidated Appropriations Act. So it was a $900 billion COVID-19 aid package. $300 billion went in unemployment benefits, $284 billion in forgivable paycheck protection loans. New loans can be made through your bank and through the SBA through March 31st of 2021. The act did expand the allowable uses of PPP funds. We'll cover that later. It simplified the forgiveness process for smaller loans, and it clarified the proper tax treatment of the loan proceeds and the forgiveness amounts. Second draw loans with a 25% gross receipts reduction are intended for smaller and harder hit businesses. First-time PPP borrowers are subject to the program's original eligibility requirements. Business organizations that did not receive a loan or received an amount less than what they expected can reapply for the maximum amount available to them. Borrowers that returned all or part of their previous PPP loan can reapply. PPP borrowers may apply for a second draw if they have 300 or fewer employees, they have used or will use all of the proceeds of their first loan, and they've had a gross receipts reduction of 25% during a quarter in 2020 compared to the same quarter in 2019. So costs eligible for loan forgiveness, I think everyone's probably familiar with the payroll costs, the mortgage interest, the rent and utility payments. This has been there since the beginning. Group insurance payments were further defined to include life insurance, disability, vision, and dental insurance. They've added a few categories: covered worker protection expenditures. So these are things that were needed to comply with COVID-19 federal and safety guidelines. Covered property damage related to vandalism and looting in 2020 is another area of coverage. Covered supplier costs that are essential to the borrower's current operations, and covered operating costs, which include software or cloud computing services. Deductibility was a big issue. PPP borrowers can deduct the payroll costs and other eligible expenses that are covered by their forgiven loans, even though the loans themselves are tax-free income. This was a point of contention for a while. The Treasury had taken the position that if the income wasn't includable, the expenses were not deductible. But the new rules have clarified that the income is not income for gross income purposes, and the expenses are deductible. So let's talk about second draw PPP eligibility. Borrowers are allowed one second draw loan. Entities that are permanently closed cannot receive a second draw loan. Businesses and other types of entities with not more than 300 employees are eligible. 501c6 organizations and destination marketing organizations with 300 or fewer employees are subject to a lobbying threshold. They can't have more than 15% of their receipts due to lobbying activities. They cannot have more than 15% of their business activity dedicated to lobbying activities, and their lobbying costs cannot exceed $1 million. Self-employed individuals, sole proprietors, and independent contractors are again eligible. Borrowers whose gross receipts during the first, second, or third quarter of 2020 that demonstrated a 25% reduction from the same quarter in 2019. So there has to be a 25% reduction. If you had entities that weren't in business during the first and second quarter of 2019, but were in business during the third and fourth quarter of 2019, they must have gross receipts in the first, second, or third quarter of 2020 that demonstrated 25% reduction from Q3 or Q4 of 2019. So there's some slightly different rules if you weren't in business for all of 2019. How much can I borrow? Well, we're back to the rate for most businesses. We're at the same spot that we were in originally. It's 2.5 times average monthly payroll cost for 2020 or 2019, not to exceed $2 million. So you do have the ability to, if your sales are higher in 2019 or 2020, to elect to use that higher period. If not, you can work off the schedules that you submitted for 2019 information. If you are a restaurant, bar, or hotel in NAICS code 72, you're going to get 3.5 times the average totaling monthly payroll costs, not to exceed $2 million. There are some special rules for businesses that did not exist for the entire year prior to 2/15/20. And basically what you're going to do is take the sum of the total monthly payroll cost divided by the number of months in which the payroll was incurred, and then multiply that times 2.5%. For seasonal employers, you can take the average monthly payroll expense for any 12-week period between 2/15/19 and 2/15/20. PPP2 covered period and application. Borrowers can choose a period between 8 and 24 weeks. This was a little bit of an issue in the first round. We were not 100% sure that they could use a period between 8 and 24 weeks, but borrowers can do that now. SBA Form 2883 SD will be used as the second draw application that has been released, it looks like this morning. For loans of 150,000 or less, a borrower can submit a certification attesting that it met the revenue loss requirements on or before the date it submits its loan forgiveness application. So with an application for under $150,000 in the second draw, you don't necessarily need to produce documentation of the drop when you are applying for the loan, but you will need to submit it before you proceed for forgiveness. If the loan is greater than $150,000, the borrowers must submit documentation showing the 25% reduction in gross receipts. We're going to do that probably not by using tax forms, because most people's 2020 tax returns are not done yet. Most likely using quarterly financial statements or bank statements to show that 25% reduction. Loan forgiveness. So the second draw loans are forgivable. We're going back to the 60-40 allocation. So at least 60% of the costs that are forgiven have to be payroll related. As we touched on a little bit earlier, they've expanded the payroll and non-payroll costs. We have the payroll costs, the mortgage interest, the rent and utilities, which we've always had. We've got the further clarification of what constitutes a group insurance payment. And then we also have the covered worker protection expenditures, the covered property damage, the covered supplier costs, and the covered operating costs. Simplified loan forgiveness for loans under 150,000. Borrowers must sign and submit a one-page certification form and attest to complying with the PPP requirements. The certification requires a description of the total number of employees retained due to the loan, the estimated total amount of funds spent on payroll, and the total loan amount. PPP second draw borrowers must submit documentation showing a 25% reduction in gross receipts on or before the date of forgiveness. So again, you don't necessarily have to provide that information up front if you're under $150,000 loan. You will need to provide it before the forgiveness process. These loans can be selectively audited, so borrowers are required to retain employment records for 4 years and other records for 3 years. Tax clarification on PPP1 and PPP2 second draw. PPP borrowers can deduct the payroll costs and other eligible expenses covered by forgiven loans. The loans themselves are tax-free income, which for basis purposes, the tax-free income will be offset by the deduction, and there'll be no increase in tax basis. Forgiven amounts and EIDL loans are not included in gross receipts. And then the employee retention credits. So the employee retention credits were in the first round of COVID relief. So they were provided for. The new wrinkle is that, well, originally you could not take a PPP and an employee retention credit. So I think most of us focused on the PPP and didn't really focus much time and energy on the employee retention credit. Now you can take a CARES Act forgivable loan and the employee retention credit. For 2020, you have to show that your operations were fully or partially suspended due to COVID-19, or a gross receipts drop of more than 50% compared to the same quarter in the previous year. You could continue to take the credit until your gross receipts exceeded 80% of the gross receipts in an earlier quarter. Employers with more than 100 employees could receive the credit if they closed due to COVID-19. Those with 100 or fewer employees received the credit regardless of whether or not they were open for business. So let's just talk about the update. So the new statute allows for the retroactive ability to get a PPP loan and claim an employee retention credit for 2020. So you are going to want to take a look back and see whether you can also claim an employee retention credit if you got the PPP loan. As I said, you can do it retroactively, but it cannot be based on the same dollars of payroll costs. So you have to use different payroll than you used in your PPP forgiveness application to compute an ERC for 2020. For 2021, the rules have increased the percentage from 50 to 70% of qualified wages. They've expanded eligibility also by reducing the requisite year-over-year gross receipts deduction from 50% to 20%. They've also increased the maximum amount of creditable qualified wages from $10,000 per year to $10,000 per quarter. The extended due date for taking the ERC credit went from December 31st, 2020 to June 30th, 2021. The computational changes that I just discussed only apply to the 2021 credit and not the 2020 credit. So thank you. I think at this point, we would, certainly can pass it over to Greg to get his comments, and also if we have any questions that we need to get answered, we can certainly do that.
Thank you, Brian. Hello, everybody. Hello, Coach. Glad to be with you folks. That's very comprehensive. They're going to be emailing that out to you at the end of this presentation. So it's great. We don't have to take that deep of notes. The first thing from a banking standpoint, I'm representing all the banks here, is that if you're interested in these loans and either extension on your first run or your second round, you need to contact your bank and get on their waiting list, whatever way they do it, whether they have a portal. We happen to just take names, write them down on a list, because we're still waiting to receive the guidance, and we will adjust our portal, which gathers the information to conform to the new rules. So we're all in the same boat there. We're looking for that details on the bank side. I know you're going to be hearing that the CDFIs and minority businesses, and there are different things that have started their application process today, and more is going to be on Wednesday. But as far as the banks for businesses go, we're not ready. We won't be ready for a little while, and we want to make sure everything is in compliance, and we only go through it once. For those of you that did participate in the first round, I'm sure you know exactly what to expect, and should go a lot smoother than the first time. When he mentioned about the certification, it made my ears go perk up a little bit. We do want to have that documentation when that certification comes in. We do want to look at it as underwriters. We want to make sure that you got it all in place. So we're going to make sure that our portal or something captures that. Even on the short form, we're just not going to take that risk. I can tell you right now, unless there's some rule that says you're absolutely forgiven if you make a mistake and don't see something. So I suspect other banks would feel that way, but we'll wait and see how the details arrive. So unfortunately, there's not a lot to say other than, I think you did a wonderful job as far as the details of what the differences are from the first time and the second time. And I think we'll have a chat about what's available here in the questions and answers. I don't have much to say other than we're ready to go. We stand ready to change and get this money out as smoothly and as quickly as possible to the participants and do our job like we did last time. We're not as frantic as last time. We don't know how fast the money is going to go. We again, by getting on the list early, if in fact it does go quickly, it's first come, first serve at my bank, and I'm sure it's very similar at other banks. So I'll stop there and turn it back to the panelists.
Thank you, Drew. Thank you, Brian. Jeff Pugliese here with the Chamber team. I'll take a shot at delivering some of the questions that came in through the Q&A and the chat portal. Some of them may have been covered to some degree, but in fairness to the question and to the gentlemen and ladies who posed it, we want to make sure we get those answered properly. So I'll go one at a time, if you don't mind, gentlemen here. We'll start with the Q&A portal, and my organization came into being on 1/1/2020. I understand that there is a way for us to apply for a second round loan, even though we can't document a comparison to 2019, but I have not found guidance as to how to do this. Drew, Brian, you care to take a shot at that?
And we're still waiting for additional guidance, but I do agree with the premise of the question. If you were in operation on 2/15/20, you should be eligible for a second draw PPP loan. I guess I should say you should be eligible for a first draw because you probably wouldn't have gotten the second, you probably wouldn't have gotten the original draw.
Gotcha. Okay, thank you very much. That's very helpful. All right, moving on down the line here, still in the Q&A portal. How does the 25% gross receipts reduction account for restricted/capital funds for a nonprofit? We have had an operating loss of over 30%, but that was offset by capital funds for special projects, and these funds cannot support salary or related operating costs.
So I'm not a nonprofit expert. I would tell you that the nonprofit gross receipts are measured as they are in section 6033 of the Internal Revenue Code. So I think we would probably need a little more guidance to understand whether those particular capital reimbursements might be included in your income or not. But that is how you would determine it. You'd have to look at section 6033 of the IRC to determine whether you have a 25% gross receipts deduction year over year.
I think all of us are looking for what the definition of the gross receipts are.
Yeah, and so the definition of gross receipts is pretty expansive. It's, pretty much all income from whatever source derived, very similar to the tax concept of business income. I do think you can exclude some basic things like capital gains and capital. Those are definitely excluded. But I think I would focus you on the definition of basically it being all inclusive and trying to take into consideration all of your sources of income. But I would say, one of the other issues that we've run into is whether it's going to be on a cash or accrual basis in terms of gross receipts. And it looks like however you keep your books is going to be the method you're going to use for your gross receipts calculation. To add some level of complication, we do have some clients who are on a cash basis for tax purposes and on a GAAP basis for book purposes. I don't think any final guidance has been issued as to which method you would use at this point.
Thank you, Brian. Thank you, Greg. Going back to that first question, if you don't mind, Brian, we did have a follow-up come in. My nonprofit, which came into being on 1/1/2020, did get a first draw loan. I am assuming your response means we should be able to apply for a second draw, but the specific instructions are not available yet. Is that fair to say?
Yeah, I think you would be able to get a second draw, yes.
Great, thanks for clarifying. This next one does deal with the employee retention credit. Could you apply for a second employee retention credit if you successfully received one under the first CARES Act? So I guess the question is, if you received an employee retention credit the first time around, can you get one again and apply for PPP?
Well, so I'm assuming from the question that they received an employee retention credit in 2020. That would certainly not preclude them from getting a 2021 employee retention credit, and it would not preclude them from getting a PPP second draw loan.
Very good, thank you. One more in the Q&A and then we'll switch over to the chat. Can we use our state of Connecticut quarterly sales tax returns to determine the 25% reductions between 2020 and 2019?
I have not seen, they've certainly talked about you having the ability to use tax forms. I tended to think about that as income tax forms. There's nothing that says you can't use them. The statute itself just calls out tax forms, quarterly financial statements, and bank statements as permissible types of evidence, but it doesn't exclude quarterly sales and use tax reports.
Okay, very good. One more came into the Q&A. Will we need to apply for forgiveness and receive it from the first round of PPP before we apply for a second round? Our bank has not allowed us to apply for forgiveness at this time.
Yeah, you don't have to apply for forgiveness. You just have to have used or will use all of the funds from the first PPP loan before you get the second disbursement.
Excellent, very helpful. Okay, as we transition to the chat portal here, a quick housekeeping note. If you have a question and you're calling in to today's session, as Johanna mentioned at the top, please email her at johanna@middlesexchamber.com and she will make sure that your question gets posed. All right, transitioning to the chat portal here. Let's see, we dealt with a few of these on top. You will indeed get the presentation after the fact. Okay. Hello, does the employee requirement for 300 employees relate to actual employee full-time employees or the actual employees on the payroll? We have a lot of part-time workers, so we need clarification. FTE versus on the payroll.
Yeah, I believe it's intended to be the head count. There's no FTE language within the statute, but we are looking for some more clarification on that. But for now, I would assume it's head count as opposed to FTE.
Very good. Thank you, Brian. Moving on here. The 25% reduction is for any 2020 quarter compared to the same quarter in 2019. That's in question form, one single quarter. Is that accurate?
Yeah, so that's a perfect way of describing it. So if for a lot of our clients, we're looking at the 2020 second quarter compared to the 2019 second quarter. So you do have to compare the, similar quarters to each other in the analysis. So for instance, you couldn't take the third quarter and compare it back to the second quarter of 2019.
All right, very good. One did pop into the Q&A portal again. Is second round PPP loan available to machine shops less than 300 employees? I imagine the answer is yes.
Yes, it would be.
Yes. All right, thank you very much. Back to the chat here. Apologies, can you repeat what counts in the 25% reduction in costs for PPP? We had 25% reduction in earned income, probably closer to around 60%, but had a request that has offset much of that. That kind of trailed off at the end there, but did you follow that question?
I think gross receipts is a fairly broad concept. So I think, you want to look at if your gross receipts on a broad basis are not down more than 25%, then you're going to have to try to look at some of the exceptions to gross receipts. And really the only big exception to gross receipts is capital gains and capital losses. So if you had unrealized capital gains or realized capital gains and losses running through your P&L, those would not be counted. I think, with gross receipts, it really is a very broad definition. I think the only things that we've really seen excluded from the gross receipts definition are PPP funds. So if you got a PPP loan in the prior year in the first draw, that's not going to be includable, and EIDL loans are not going to be includable.
Okay, understood. There is a quick note from our friends at Chelsea Groton Bank, and they just agree with Greg's assessment from the banking sector about needing more guidance and clarification from SBA before opening the portal. That speaks to the next question here. When can we apply and how long will it take to process and receive funding? Kind of a fair question, but I think we covered it. But Greg, you want to take a quick crack at that just so we respect the question?
Well, we're still we still have folks that have not received forgiveness yet, waited to hear what was going to come on the second round. So the timing of that, we've already had a lot that have already received that. It would be normal. It depends on how quickly they get the application in. We will act on it immediately and get it down to the SBA. Their timing is unknown yet. On that, we hope it will be quick, but there are folks that have found the process very slow too. It depends on whose desk it lands on sometimes. It's really hard to say.
Okay, understood.
Should be similar to the first round, and we'd like to believe better in the first round.
Good, Greg. That's very helpful as always. All right, moving down the line here. Do you need to have submitted for forgiveness on PPP 1 before you apply for PPP 2? I think we affirmed that the answer to that is no. Moving on here, my company revenues for 2020 Q1 and Q2 were more than 25% less than the same quarters in 2019. However, 2020 Q3 and Q4 were not more than 25% less than those quarters for 19. Revenues for the year 2020 were more than 25% less than annual revenues in 19. Do we qualify for second PPP?
Yeah, based on those facts, you would qualify because you have a quarter that's down more than 25%. There's actually also language in the statute that said that if you could prove that you were down more than 25% for the year, they would assume that you were down more than 25% for a particular quarter. But I think, yeah, just based on those facts alone, they would qualify.
Okay, understood. Another one here. My business opened during the pandemic on August 26th, 2020. Prior to this, the business was created in 2018, but had extensive construction work done and then utility upgrades and then further delayed by the pandemic. Does this business qualify for PPP funding, even though there were no sales prior to August 26, 2020?
The basic rule says you had to be in existence on February 15th, 2020. So it sounds like the entity may be in business as of February 15th, 2020. It was just going through some construction or some other costs that were being capitalized. I guess what you'd have to look at is whether the company had payroll during either 2019 or 2020 that could allow them to qualify for the program.
Okay, very good. All right, next question here. Can you explain the premise of the employment tax credit versus PPP payroll forgiveness? Does this mean we have to use a different quarter of payroll that the 2.5 times month period that is used for the PPP? It's a little unclear at the end there.
Yeah, so I think the way I've looked at this is I've kind of said to myself, okay, if I go out and I get a PPP loan, well, I'm going to get 2.5 months worth of payroll costs. So let's assume that I get that PPP loan. I use for the next 10 weeks, I use my PPP funds to fund my payroll. I can't also take an employee retention credit on those funds. But if I were to exhaust the funds and then using my payroll for the next 2.5 to 3 months before we get to June 30th of 2021, could I use that for ERC purposes? And I think that's one way you could do it. The other way to do it is, you could potentially use your ERC credit to start off with. You've got 24 weeks to use the payroll protection loan, so you could potentially do the inverse of that as well, but you just can't use the same payroll costs for each.
Okay, very good. That's very clear. Jerry, if you still are unclear with respect to your question, drop a note in the chat for us. Next one, would payroll taxes that were excluded under the first PPP loan, like FICA and federal, be allowable for the second PPP loan?
So you're going to look at gross wages when you're computing your PPP amount. So you do not have to take a reduction for taxes withheld.
Okay, very helpful. Moving on here. If received the PPP in the second quarter, does that count on income for purposes of lost revenues? It looks like that has already been covered. Okay.
Yeah, it does not count. So the PPP funds do not count against you.
Gotcha. Great. Thanks so much. All right. Does our PPP deposit come off of our total deposits in comparing quarter to quarter? Q2 of 2020 was less than Q2 of 2019 if we don't count the PPP deposit.
Yeah, so you wouldn't count the PPP money.
Okay, very good. Sorry to be redundant, want to get to all of these. All right, couple back in the Q&A here. Is the SBA loan considered part of gross receipts, or is that excluded along with EIDL and PPP loan? I think we've been through that as well. Great. Okay, from Patrick, if you show more than 25% reduction total income from 2019 versus 2020, would you be able to utilize your tax returns as proof? Otherwise, as a real estate salesperson, what would you use as proof of your 25% loss?
Well, I think, there's a couple different things you can use. So you can use tax returns, but you probably don't have your 2020 tax return done yet. So it would be hard to use the 2020 when compared to 2019 to apply initially. You certainly could use financial statements if you keep those, Based on the question, it sounds like maybe there's no financial statements, then I would probably use my bank statements to show the 25% reduction in deposits.
Okay, great. So Johanna indicated there are no questions that are coming in through her email. I'm just going to ask her to confirm if making sure that I have gotten to each question that was posed. We went through them pretty quickly. I think we're.
I have one additional comment on the idle or economic injury disaster loans in the first round. They were subtracted from the PPP. They're not going to be on the second round. Also, we're waiting for guidance on how we return the money of the folks that made payments on those, how we handle that from our side, give the people back their interest on those loans in the first round. So those of you that missed that, I just wanted to make sure I told you, look out for that. The banks don't know how we're going to handle that yet. We're waiting for SBA to give us some guidance.
Thank you, Greg. Appreciate that. One more did jump in here. Are there any issues with the state of Connecticut not recognizing the deductibility of the expenses paid with PPP?
So generally, the state of Connecticut follows federal taxable income, but is there the potential that they could decouple and not recognize the deduction? I guess they could, but they haven't done that as of yet.
Very good. How about, do the same rules apply to a one-person entity, i.e. $100,000 compensation maximum?
Yes, the original rules are in place regarding the $100,000 maximum for the shareholder in that scenario, or the employee.
Thank you, Brian. Thank you, Drew. Thank you, Greg. I think I'm done on this end. JB, what do you got on your end?
Yeah, I just got one that came in. We received round one, had to calculate use for the 8 weeks because there was not enough to maintain employees for 24 weeks. While what we use is expected to be forgiven, our bank hasn't opened that up to us yet. There's a small overage that will need to be repaid because it could not be used. In that case, does that have to be repaid before applying for PPP round two?
So I guess the question is, did they use all of their funds that they got for payroll? And my guess is they probably used all of their funds for payroll, but they couldn't get a full forgiveness because their FTE count went down. So I think based on the way I'm interpreting the statute, I think you have to have used or will use all the proceeds. It does not condition it upon you getting full forgiveness because of an FTE issue.
Okay, thank you very much. That's all I have, Jeff.
All right. Well, I think we're good for now, everyone. Thank you for joining us. Let me kick it back to Larry for any thoughts that he wants to share from his end. But if you have any questions, send them into the chamber office and we'll get them answered. Back to you, Coach.
Okay, again, thank you very much, Drew, Brian, and Greg, and thank you for our members being on. We will be following up with probably some more workshops on this as it goes forward, and we get more information as it moves through the channels of the federal government and goes out to our different member businesses throughout Middlesex County. Thanks again, everyone, for being on. And again, anything you need from us, call us. We're here for you. Very, very happy to help you. Thank you very much. Have a great day.
Thank you, everybody. Thank you,
Thanks,
Greg.
everyone.
Thank you, Brian. Thank you, Drew.
Brian, excellent job. Thank you.
Thank you. Take care,
All
guys.
very much.